S&P 500 and the Nasdaq Composite closed lower on the first day of August. Fitch downgrades US long-term rating to AA+. Sell-off in Europe after Eurozone manufacturing activity slumps. Stocks in the Asia-Pacific opened lower, while the GIFT Nifty suggesting a start in the red for the Indian market. Oil prices firm despite a strong dollar and signs of profit-taking following the July rally. Brent trades closer to $86 a barrel. Gold prices, meanwhile, down over 1%, weighed by a strong dollar and an uptick in bond yields. Mixed trends in the July auto sales numbers, with Maruti Suzuki, Ashok Leyland, Eicher Motors and TVS Motor reporting a growth, while Hero MotoCorp sees a 12% dip. In important earnings to track, Titan, Ambuja Cements, HPCL, Interglobe Aviation are expected to report their first quarter numbers today. A day after a crane collapsed at a highway construction site in Maharashtra kills at least 20 people, the police booked the subcontractors of two agencies involved in the construction for negligence. Fresh violence reported from Gurugram's Badshahpur as tensions run high in Haryana after communal clashes in Nar district. Schools to be open in Gurugram today, while restrictions to continue in Sona town. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast, and we are waking up to weak global cues and big news coming in as well, where Fitch has downgraded US's long-term rating to AA+ from AAA. So that is having an impact, of course, on the other global markets as well. We did see a weak handover from the US markets, but let's take a look at what the Asian markets are doing currently. Largely lower, so to say. We have a cut of around 141 points on the Hang Seng. The Taiwanese index, that too, is declining by 0.2%. Nikkei, as we speak, is down 1.5%. We have something like a Kospi down 0.9%. So across the Asian market, it is a red-looking screen. So some profit taking is what we are seeing after yesterday's good move. The GIFT Nifty, that will come up for you on the screen, and that one is indicating that the start for our own markets, well, that would be in the red. The implied open is suggesting a 30-point cut as per the GIFT Nifty rates right now. But let's talk about the US markets, because Wall Street ended yesterday's trading session mixed. The Dow Jones added 71 points, while the S&P fell by 0.2%. The tech-heavy Nasdaq, the Nasdaq Composite, that is, also ended lower, shedding 62 points. On the data front, job openings came in below expectations, and the July manufacturing PMI showed a continued contraction as it remains below 50 for the 9th month. Now let's also listen into some commentary coming in from Louis Schenner of Brookings Institution and Bob Michel of JP Morgan Asset Management on the state of the US economy and expectations from the Fed.
Data have been coming in as we would hope if we're going to get a soft landing. The unemployment rate hasn't budged. Other measures of labor market tightness like vacancies and the quit rate have come down. Consumer spending is resilient and prices have been coming down. But you know, June was a great month of data, but that was 1 month. So one thing we want to know is that prices move around a lot. It's really unclear exactly what is happening to prices. So we're going to be looking for a sustained slowing in prices over time before we can declare victory. And then I think more importantly is it's possible that what's going to happen is the economy is going to slow somewhat and inflation will come down, but it's going to come down and kind of get stuck at a level higher than the Fed's target. We don't know for sure that this soft landing is kind of landing to the Fed's target, or whether or not we're going to end up after this episode with an inflation that's more like 2.5 or 3, and then the Fed might have to do more and actually bring the economy into a recession in order to get that inflation down. So that's the kind of thing that we're watching. I think it's way too early to know. I'm not a pessimist at all. I think there is a good chance. I just think this economy is so different from what anybody had expected, from what anybody understands. There's so many variables that could change. We don't know what's going to happen within the labor market participation. We've seen head fakes before on inflation. So I just think there's a lot of uncertainty.
Markets concerned that perhaps inflation isn't as low as the Fed would like to see it. Even though there's been disinflation, it's coming down. Growth is slowing. Markets get concerned that the Fed may have to come back and keep hiking rates. One component of the ISM that we spent a lot of time talking about was employment. It continues to decline. You've only seen it at these levels when the Fed has been cutting rates. So either this is something brand new, or the markets, the data in the markets, the economy is telling us we're going to see slowdown.
Okay, let's stay with the global cues and talk about the big news. Fitch has cut the US long-term credit rating to AA+ from the previous AAA rating. The rating agency cited expected fiscal deterioration over the next 3 years. The agency stated that repeated debt limit political standoffs and last-minute resolutions eroded confidence in fiscal management. This comes after the agency had placed the country's rating on negative watch in May, citing the debt ceiling fight in Washington. The White House has strongly disagreed with this decision. A US official said it would be quite surprising to see a major increase in borrowing costs from Fitch downgrade. Meanwhile, Goldman Sachs says the downgrade should have little direct impact on financial markets, as it is unlikely there are major holders of Treasury securities who would be forced to sell based on the ratings change. Okay, of course, we'll get you more details and opinion on this one as well. But let's get you the final update in our global market wrap this morning. European markets ended Tuesday's trading session lower, with the French CAC and the German DAX slipping over 1%, while the British FTSE closed about 33 points lower. All major BP reported a nearly 70% drop in second quarter profit, led by weaker fuel prices. Meanwhile, manufacturing activity in the Eurozone fell at the fastest pace since the start of the COVID-19 pandemic. The Eurozone manufacturing PMI fell to 42.7 in July, its lowest level since May 2020. Germany, Europe's largest economy, reported significant weakness along with France and Italy. Okay, that is the global market action. We have a lot of cues to track from there, but how will these cues and our own domestic cues impact our markets? We have our research team joining in to tell you just that. What is your trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you. How are you reading the market cues today?
Well, good morning. Today's morning development, which basically, like you mentioned, the Fitch rating downgrade as far as the US long-term rating is concerned, has actually led to a little of a sell-off as far as both US futures are concerned, as well as the Asian markets. And this is something that we would need to watch out for more closely in terms of, how exactly other reactions coming in. US markets ended overnight on a very mixed set. And, yesterday, we've been highlighting the fact that crude oil prices have now come at a fresh 3-month high. Yesterday, there was a bit of a cool-off. Once again, today, there has been buying activity seen as far as crude oil prices are concerned. So that particular trend continues to be seen. Now, coming closer to the Indian markets, what's actually happened is that yesterday, markets ended a very range-bound session with minor cuts. However, one particular pocket of the market that continues to see significant buying interest has been the PSU pack. Yesterday, it was the turn of Coal India, and NTPC continued its up move that this particular stock has seen. So it'll be interesting to see, whether this particular pocket or that particular segment can continue to see the buying activity. Market breadth yesterday was again in favor of advances, and it was yesterday in a 3:2 ratio, despite the fact that, you actually saw a bit of cooling off in the benchmark indices. Broader end of the markets, the breadth was quite supportive. Key cues today, what are we watching out for? Significant results, reactions will come in from HPCL, Titan, as well as Mankind Pharma. Like we mentioned, Asian markets and GIFT Nifty both are indicating a slightly subdued start to today's trade.
Okay, all right. Thank you so much for all those cues, Vivek. But a lot of stocks that will be in focus as well. Surbhi has that list. Good morning, Surbhi.
Good morning. So a lot of earnings that have come in. Let's start with Thermax first. The revenues were up 17% and margins have expanded by 100 basis points. Pikaji Foods, the revenue was up by 15% and the net profit came in at 42 crores versus 16 crores same time last year. Metro Brands, the company saw a revenue growth of 14%, but margins have contracted by nearly 400 basis points. Reddington, the revenue saw a growth of 26% on a year-on-year basis. The margins have come in at 2% versus 3% same time last year. Sirma SGS, the revenue is up 54% on a year-on-year basis, but EBITDA margin is down nearly 250 basis points, came in at 6.1%. Apart from that, Sula Vineyards will also be on our radar. The company has received an excise duty notice of 116 crores from Maharashtra Excise Ministry. Some auto companies will also be in focus on the back of their July auto sales numbers. For Eicher Motors, the Royal Enfield sales were up 32%. For Ashok Leyland, the strong sales was led by high growth in M&HCV sales. TVS Motor, the July sales saw strong domestic volume growth, but the exports continued to be weak. And lastly, Hero Motor, the total sales were down 12% in the month of July.
Okay, all right. That is the list about the stocks that are on our radar today, but a lot of cues from the F&O space as well. Manglam is joining us now. Good morning, Manglam.
Good morning. So yesterday was a largely range-bound trade, and this again certifies the thesis that levels upwards of 19,800 are seeing a fair amount of resistance. However, as soon as the market moves towards that 19,650 to 19,700 mark, we are seeing some purchase itself. A couple of things we need to watch out for. One, the GIFT Nifty is indicating a negative start, as all you guys have been pointing out. But importantly, weakness in the global arena usually becomes a buying opportunity for the Indian market. So let's see whether today's dip will be bought or not. Important to watch what the FIIs do. For 4 trading sessions, they've been selling in the cash market. However, that selling has reduced drastically over the last 4 trading sessions itself. There was some selling in index futures as well, but because this is a largely range-bound market, there has been unwinding on both the long as well as the short side itself. At the start of the series, the FIIs saw a futures premium on the Nifty of 151 odd points, and that too has come down as interest has waned. Open interest is coming down. The futures premium now stands at around 79 points itself. There was a purchase of 5,100 crores in index options. A large part of that was on account of the Nifty Financial Services expiry. So let's talk about the ranges that the FIs and the participants in the markets are playing for. The 19,800 call and the 19,700 put, both of them extremely active for premiums of 40 to 50 rupees a pop, telling you that 19,650 to 19,850 would be the range they are eyeing. And those who are writing the 19,750 straddle for a premium of close to around 120 odd rupees are playing for a slightly broader range, 19,600 to around 19,800 itself. Largely 19,650 to 19,850 is the range that the street is playing with, and it would make sense to buy closer to 19,600 to 19,650 itself. The Nifty Bank is also between a range of 45,400 to 46,000 odd, and this lower end of the range is supported by the 20-day moving averages for both the Nifty as well as the Nifty Bank. Important to watch out for individual stocks. Hind Copper, after a big move over the last two trading sessions, has entered FNO ban. A lot of short covering seen on Navin Fluorine, so that's one stock I'll be watching out for. And finally, Hero MotoCorp, a huge amount of short positions added on that counter as well.
Okay, all right. Thank you, Manglam, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, Union government moves to apply the polluter pays principle on the automobile industry with the new extended production responsibility policy. More on that when we return. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, let's talk about the GST Council now. It is set to hold its 51st meeting today. The meeting will mainly focus on the decision of levying of 28% GST on the online gaming industry. My colleague Shivani Bazaz is here with the details. Shivani, what are you picking up?
The GST Council is meeting today, less than a month after 50th meeting of the Council took place here in New Delhi. The meeting this time is happening virtually, and the sources suggest that the agenda primarily involves only online gaming. Remember, in the last meeting, the Council had unanimously decided to clarify on the 28% GST on online gaming, a decision that had evoked strong statements from the online gaming industry. However, sources suggest that the Council is unlikely to change its stance and go back on the 28% GST decision. What is likely to be discussed is the definition of online gaming and their differentiation from online money gaming. Sources suggest that the GST Council will also discuss the provisions of online gaming provided by individuals located outside India. At the moment, likely that no other item will be on the table today for the GST Council's deliberations.
Okay, this will be important to track. We'll keep coming back to you, Shivani, for that. But moving on, the government is also looking to mandate auto companies to recycle some vehicles sold by them. Sources say the centre is working on a new extended production responsibility policy in an attempt to apply the polluter pays principle to check emissions. Parikshit Luthra is here with the exclusive details. Parikshit, how will this impact the auto industry?
The Environment Ministry is leading these discussions on an extended production responsibility policy for vehicle manufacturers in the country. Now, as per this policy, mandates are being considered whereby vehicle manufacturers would have to commit to taking off a certain number of vehicles, a certain percentage of vehicles sold by them off the roads. These would be end-of-life vehicles, and recycle them. They would also have to commit to utilizing a certain percentage of recycled material in production of new vehicles in the country. Now, this could have far-reaching implications for the automotive industry, and it would not just be limited to one or two segments, but all vehicle, two-wheeler, three-wheeler, car and commercial vehicle manufacturers as well. Currently, there's only been one meeting. These negotiations and this thinking is at a very initial stage, but yes, the government wants to move ahead with it very seriously. More interministerial meetings are going to take place. A technical committee will also be formed, and the government will seek inputs from the automotive industry on how to move forward on this.
Pariksha, thank you so much for joining us with those exclusive details. That's about the automobile industry. But it's time for another break. When we return, we'll get you the latest updates from the crane accident in Maharashtra and the violence in Haryana. Stay tuned for that. Welcome back. You're still tuned in to Power Breakfast on CNBC TV18. Let's talk about some national news now. Communal tensions continue to keep Haryana on edge. Fresh violence was reported from Gurugram's Badshahpur yesterday, where a mob allegedly attempted to stop a religious procession taken out by the Vishwa Hindu Parishad. At least 5 people have been killed and over 50 injured in the state since clashes broke out in Nar district late on Monday. Internet services remain suspended in Nar and Faridabad districts, while schools in Gurugram continue to be open. However, restrictions remain in place in Sona town. Moving on to some more updates and get you some more national news. This is from the crane collapse tragedy in Maharashtra. An FIR was registered at the Shahpur police station against the subcontractors of the agencies that were hired to construct package 16 of Samruddhi Expressway. Prime Minister Narendra Modi announced an ex gratia of 2 lakh rupees from the PM-NRF for the next of the kin of each deceased. Remember, at least 20 workers, including 2 engineers, died after a girder machine fell on them during construction of the 3rd phase of Samruddhi Expressway in Maharashtra's Thane. Okay, of course, these are unfortunate incidents, and of course, we'll keep getting you more updates on them. But switching back to what's happening in the Asian markets continue to be lower, and that is something we are tracking as well. The Taiwanese index has extended its losses, 140 points lower on that one. Hang Seng is down around 100, and across the board, we are seeing big cuts come through, be it Nikkei, be it Kospi, or be it the Straits Times. The GIFT Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets could be 50 points lower. So this is a level that we are tracking, 19,762 on the GIFT Nifty. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.